Have you ever wondered why a simple piece of paper in your wallet can buy you a cup of coffee, or how ancient civilizations managed to build empires without modern banking systems? Today we're diving deep into one of the most fascinating and eye-opening books about the hidden forces that shape our world, The Ascent of Money, by renowned historian Niall Ferguson. This isn't just another dry economics textbook, it's a thrilling journey through 5,000 years of financial evolution that will completely change how you see money, power, and civilization itself. Ferguson takes us on an incredible adventure, revealing how money isn't just a currency, it's the invisible thread weaving through every major historical event, from the rise and fall of empires to the creation of modern democracy. What makes this book absolutely captivating is how Ferguson connects seemingly unrelated events across centuries, showing us that understanding financial history is the key to understanding human civilization itself. But here's what's truly mind-blowing. The lessons from this book aren't just academic curiosities. They're practical insights that can help you navigate today's complex financial world, understand current economic crises, and even make better personal financial decisions. Whether you're a complete beginner to finance or someone with years of experience, Ferguson's storytelling approach makes complex concepts accessible while revealing patterns that most people never notice. By the end of today's exploration, you'll see money not as boring numbers on a screen, but as one of humanity's most powerful inventions that continues to shape our future in ways you never imagined. Niall Ferguson's The Ascent of Money stands as one of the most comprehensive and engaging explorations of financial history ever written. Published in 2008, just as the world faced one of its most severe financial crises since the Great Depression, Ferguson's work provides crucial context for understanding not just what happened, but why financial systems behave the way they do across different eras and cultures. Ferguson, a distinguished historian and professor at Harvard University, brings his expertise in both European and global history to bear on this ambitious project. Rather than approaching finance from a purely economic perspective, he examines money as a social and cultural phenomenon that has fundamentally shaped human civilization. His central thesis challenges readers to recognise that financial innovation has been just as important as technological advancement in driving human progress. The book emerged from Ferguson's recognition that most people, including many educated individuals, possess surprisingly little knowledge about how money actually works or where our financial institutions originated. He noticed that while we readily accept the importance of political and military history, we often overlook the equally dramatic and consequential story of financial evolution. What sets this work apart from other financial histories is Ferguson's ability to weave together seemingly disparate threads, from medieval Italian banking houses to modern derivatives markets, into a coherent narrative that reveals the underlying patterns of financial development. He demonstrates that understanding these patterns isn't merely academic, it's essential for anyone hoping to navigate our increasingly complex financial landscape. The timing of the book's publication proved particularly prescient as the 2008 financial crisis unfolded, just as readers were discovering Ferguson's warnings about the fragility of modern financial systems and the cyclical nature of financial bubbles. The Ascent of Money traces humanity's relationship with money from its earliest origins in ancient Mesopotamia through to the complex global financial networks of the 21st century. Ferguson structures his narrative around what he identifies as the key financial innovations that have shaped civilization: currency, banking, bonds, stocks, insurance, and real estate. The journey begins in ancient civilizations, where Ferguson explores how societies first moved beyond barter systems to create standardized units of exchange. He shows how different cultures independently developed various forms of money, from Lydian coins to Chinese paper currency, each solution reflecting the unique needs and values of its society. Moving into medieval Europe, Ferguson examines the rise of the great banking dynasties, particularly the Medici family, whose financial innovations helped fund the Renaissance. He reveals how these early bankers didn't just store money, they created entirely new ways of thinking about credit, investment, and economic growth that would later spread across the globe. The narrative accelerates through the development of government bonds, which Ferguson argues were crucial for financing wars and building modern nation-states. He demonstrates how countries that mastered public finance gained decisive advantages over their rivals, fundamentally altering the balance of global power. Ferguson then explores the creation of stock markets and joint stock companies, showing how these institutions enabled unprecedented levels of capital accumulation and risk sharing. He pays particular attention to historic bubbles and crashes, from the Dutch tulip mania to the South Sea bubble, revealing patterns that continue to repeat in modern markets. The final sections examine insurance and real estate as financial instruments, culminating in an analysis of how these ancient concepts evolved into the complex derivatives and mortgage-backed securities that would later contribute to the 2008 financial crisis. Ferguson's exploration begins with the revolutionary moment when humanity moved beyond barter systems to create standardized currency. He traces this development to ancient Lydia, where the first coins were minted around 650 BCE. These early coins solved a fundamental problem that had plagued human commerce: the difficulty of establishing equivalent value between different goods. Ferguson shows how this innovation spread rapidly across the Mediterranean world because it dramatically reduced transaction costs and enabled more complex economic relationships. The development of currency wasn't just a convenience, it was a prerequisite for the sophisticated civilizations that would follow. The rise of medieval banking represents another pivotal moment in Ferguson's narrative. He focuses extensively on the Medici Bank, which by the 15th century had become Europe's most powerful financial institution. The Medici didn't just store money, they pioneered double-entry bookkeeping, created the first international letters of credit, and developed sophisticated risk management techniques. Ferguson demonstrates how their innovations in banking technology were directly responsible for financing the cultural flowering of the Renaissance. Without the Medici's financial engineering, he argues, masterpieces by artists like Michelangelo and Leonardo da Vinci might never have been commissioned. Government bonds emerge as perhaps the most crucial financial innovation in Ferguson's analysis. He shows how the Dutch Republic's ability to borrow money at low interest rates gave them a decisive military and economic advantage over larger, seemingly more powerful neighbours like France and Spain. The Dutch developed a sophisticated bond market that allowed them to finance their wars of independence and build a global trading empire, despite having a fraction of their enemies' population and resources. Ferguson argues that financial sophistication, not military might, determined which nations would dominate the early modern period. The development of joint stock companies and stock markets receives detailed attention as Ferguson examines how these institutions enabled unprecedented levels of capital formation. He uses the Dutch East India Company as a prime example, showing how it combined limited liability with tradable shares to create something entirely new in human history, a permanent corporation that could outlive its founders and accumulate capital on a previously unimaginable scale. However, Ferguson doesn't shy away from the dark side of these innovations, documenting how the same mechanisms that enabled productive investment also made possible devastating speculative bubbles. Ferguson's analysis of the South Sea Bubble of 1720 reveals how financial innovation can quickly turn into dangerous speculation. He shows how rational actors, including some of history's most brilliant minds, like Isaac Newton, became caught up in a frenzy of irrational investment behaviour. The bubble's collapse wiped out fortunes and nearly destroyed Britain's nascent financial system. But Ferguson argues that the lessons learned from this disaster ultimately strengthened British financial institutions and contributed to their later dominance. The evolution of insurance represents another fascinating thread in Ferguson's narrative. He traces modern insurance back to medieval Italian merchants who needed to protect their investments in dangerous sea voyages. These early insurance contracts gradually evolved into sophisticated instruments for managing all kinds of risk, from fire and theft to life expectancy. Ferguson shows how insurance companies became some of the world's largest institutional investors, wielding enormous influence over capital markets and economic development. Real estate emerges as perhaps the most emotionally charged of all financial assets in Ferguson's analysis. He documents how property ownership became central to middle-class identity and financial security, particularly in the United States, where home ownership was actively promoted by government policy. Ferguson traces this development through to the subprime mortgage crisis, showing how the worthy goal of expanding home ownership was corrupted by increasingly complex financial instruments that obscured rather than managed risk. The final major theme Ferguson explores is the rise of derivatives and structured financial products. He shows how instruments originally designed to help farmers and merchants manage genuine business risks evolved into speculative tools that amplified rather than reduced systemic risk. Ferguson argues that by 2008, the derivatives market had become so complex and interconnected that even financial professionals couldn't fully understand the risks they were taking, setting the stage for a global financial crisis. Understanding the historical patterns of financial bubbles can help modern investors and policymakers recognise warning signs before crises occur. Ferguson demonstrates that throughout history, bubbles have followed remarkably similar patterns. Initial rational enthusiasm for new opportunities, followed by increasingly irrational speculation, then sudden collapse when reality reasserts itself. By studying episodes like the Dutch tulip mania, the South Sea bubble, and the Mississippi scheme, readers can identify common warning signs including rapid price appreciation detached from fundamentals, widespread participation by inexperienced investors, and the emergence of complex new financial instruments that few people truly understand. The relationship between financial innovation and political power is far more important than most people realise. Ferguson shows repeatedly that nations with superior financial systems have defeated apparently stronger enemies throughout history. The Dutch Republic's sophisticated banking system allowed them to punch above their weight against Spain and France. Britain's mastery of public finance enabled them to fund the prolonged wars that established their global empire. Today's financial centres like London and New York continue to wield disproportionate influence precisely because they serve as hubs for global capital flows. Risk is never eliminated, only transferred, and this fundamental principle should guide all financial decision-making. Ferguson illustrates how insurance, derivatives, and other financial instruments don't make risk disappear. They shift it from one party to another. Sometimes this transfer improves the overall economic efficiency by moving risk to those best equipped to handle it. But when risk is transferred to parties who don't fully understand what they're accepting, or when the transfer mechanisms themselves become sources of systemic risk, the results can be catastrophic. Financial markets are driven as much by psychology and emotion as by rational economic calculation. Ferguson's analysis of historical bubbles reveals how fear, greed, and herd mentality repeatedly overcome careful analysis and prudent risk management. Even highly intelligent, well-informed investors like Isaac Newton can be swept up in speculative manias. This insight suggests that successful financial decision-making requires not just technical knowledge, but also emotional discipline and an understanding of crowd psychology. The democratization of finance, while generally beneficial, can create new forms of systemic risk. Ferguson shows how the expansion of financial markets to include more participants has generally increased prosperity and opportunity. However, he also demonstrates how this democratization can amplify bubbles and make their eventual collapse more devastating. When complex financial products are marketed to unsophisticated investors, the results can be disastrous for individuals and the broader economy. Government intervention in financial markets often produces unintended consequences that may be worse than the original problems. Ferguson documents numerous examples of well-intentioned policies that distorted market incentives and created new sources of instability. From the promotion of home ownership through subprime lending to the moral hazard created by too-big-to-fail policies, government efforts to make finance serve social goals often backfire in spectacular fashion. Understanding money's evolution reveals that our current financial system is not inevitable or permanent, but represents just one point in an ongoing process of innovation and change. Ferguson's historical perspective reminds readers that today's complex financial instruments and institutions are relatively recent inventions that continue to evolve. This insight should make us both humble about our ability to predict future developments and alert to new opportunities and risks as they emerge. The globalization of finance has created unprecedented opportunities, but also new forms of systemic risk that national governments struggle to manage effectively. Ferguson shows how financial integration has enabled capital to flow more efficiently around the world, funding development and reducing poverty. However, he also demonstrates how global financial networks can transmit crises across borders with devastating speed, as evidenced by the rapid spread of the 2008 financial crisis. The Ascent of Money ultimately reveals that understanding financial history isn't just about comprehending the past, it's about developing the wisdom to navigate an increasingly complex financial future. Ferguson's masterful narrative demonstrates that money is far more than a neutral medium of exchange. It's a social technology that has shaped every aspect of human civilization, from art and culture to politics and war. Perhaps the most important lesson Ferguson offers is that financial crises aren't aberrations or failures of the system. They're integral features of how financial markets operate. By understanding this reality, individuals and institutions can better prepare for inevitable downturns while still participating in the wealth creation that financial innovation makes possible. Ferguson's work also serves as a reminder that financial literacy isn't optional in the modern world. It's essential for anyone hoping to make informed decisions about their economic future. The complexity of today's financial instruments and markets can seem overwhelming, But Ferguson shows that the underlying principles remain surprisingly consistent across centuries and cultures. The book's enduring relevance becomes clear when we consider recent developments in cryptocurrency, central bank digital currencies, and other financial innovations. These new developments represent the latest chapter in the same ongoing story Ferguson tells: humanity's continuous effort to create better tools for storing value, managing risk, and allocating capital efficiently. For anyone seeking to understand not just how money works, but how it has shaped and continues to shape human civilization, The Ascent of Money remains an indispensable guide to one of the most powerful forces in human history.